Thank you for joining us at xm.com for this Forex Preview video. We'll be looking at Canadian employment numbers for January out on Friday. I'm Cristina Marujos, and joining me today is Marios Hadjikyriacos, investment analyst. Now, Marios, this report is expected to be fairly decent, though it will have an increased importance because it might tip the scale in whether we get a Bank of Canada rate cut in the next coming months. So what do you think we'll see in these numbers? What do you think we'll see in the report? And are we moving closer to a Bank of Canada rate cut?
I think we are. So the data are expected to be on the solid side. The labor market is expected to have added 15,000 jobs. That's less than the previous month, but still a decent number. The unemployment rate is expected unchanged. But I think most of the focus will fall on wage growth. Wages in Canada have been growing at a healthy pace in the recent years, but lately in the last few months we saw a slowdown. So if this continues, it would be bad news for the consumer and by extension for future growth. So I think the Bank of Canada will be watching this data very closely. Recently, we saw the central bank adopt a more dovish tone. They put the rate cut firmly on the table. They are concerned about a slowdown in consumption, in investment, and in jobs growth. So yeah, they'll be keeping a close eye on this data. Now, as far as a rate cut is concerned, I think we are moving closer to that and the market agrees on that. So a rate cut is priced, the probability for a rate cut by April is 50% and the rate cut is fully priced in by July. So the market is saying that it's literally a matter of time before the Bank of Canada cuts. Now, in my opinion, the risks are tilted towards an earlier rate cut than July because the Bank of Canada was already concerned about the domestic situation, and then the coronavirus theme hit the markets, oil prices collapsed, so I think that the policymakers will be even more concerned right now.
Well, the loonie is an oil-sensitive currency, and we saw the oil market take a severe hit by the coronavirus outbreak. Is there any reason to believe that there might be a positive rebound in the loonie?
Look, we might see a rebound on the jobs data, but even if that happens, I wouldn't expect any upside reaction to be sustained for very long. So as long as the market is so focused on the virus theme and the impact this might have on global oil demand, oil prices can't get off the floor, and by extension, the outlook for the loonie is cautiously negative or negative. Now, for this to change and for the loonie to be able to stage a sustainable rally, I think we would need to see clear signs that, well, at the very least, that the situation is coming under control in the sense that the rate of increase in new virus cases is at least leveling off. Or even better, there have been some clinical trials lately in China for a cure against this virus. If those are proven successful, that could be a major catalyst. That could really tip the scales for the market, and that could be the catalyst for a major comeback in the loonie. But we haven't gotten those positive signals yet. So for now, I would argue that any upside reaction in the loonie may remain relatively short-lived.
Marios, thank you for joining me today.
Thank you.
And thank you for watching this Forex Preview here at xm.com.